is in Southampton for us this morning. Morning.
Good morning to you both. Yes, I'm at the West Quay Retail Park this morning. It's been a pretty gloomy morning for the economy today. We've heard, of course, about those job losses at the Royal Bank of Scotland. 3,500 jobs are to go there in the investment bank, investment side of the business. And this is, of course, the bank which we bailed out a few years ago. It's 84% owned by the British taxpayer. So quite dramatic news for them. On top of that, we've also got results out from 6 of our biggest high street names, the likes of Tesco, JD Sports, Halfords, Thorntons, Mothercare. They've all reported that their sales over the crucial Christmas period are down, and in particular Tesco, bit of a shock for them, it's down 2.3%, and the chief executive this morning that the UK performance for the business is unsatisfactory. Well, with me now I've got a retail expert, Natalie Berg. Good morning to you. How much of a shock are the Tesco results?
Well, I think pretty big shock for most analysts. Tesco's far more exposed to the discretionary non-food sector, so I think that is probably a little bit of an issue for them compared to some of the other supermarkets. But what we're seeing now is that their food business is also suffering because they focus so much on price that it's actually led to deflation in that category.
And is this about people cutting back completely, or other supermarkets getting the share and the sales that Tesco are losing? Because we heard yesterday that Sainsbury's results, their sales were actually up for the same period.
Yeah, that's right. I think Tesco is losing out to some of its other competitors who have matched them on prices and are also pushing quality. And you have to remember, people aren't dining out as much. We're seeing some very strong results from the more premium supermarkets. We saw Marks & Spencer and Waitrose over Christmas report like-for-likes in excess of 3%, but at the same time we're seeing a lot of growth at the discount end as well. So there's a big polarization in the market.
And then some of the other names we heard from this morning, the likes of Mothercare and Thorntons, they've had a really tough year of it, and again sales are down. What's going to happen with them?
Well, I think, we have a lot of retailers on the high street. People aren't spending, and for 2012, real discretionary income is actually expected to be down again. So people have less money in their pockets. And at the same time, we are seeing a shift in the retail structure in that we don't need as many shops as we have because people are buying online. So the likes of Mothercare, HMV, a lot of these retailers need to streamline their store base and focus more online.
And there's a mixed story for Halfords, because they've got that their sales total, their like-for-like sales are down 5%, but yet their sales of their leisure goods are up 10%, things like bikes.
Yes, that's right. I think Halfords is a very unique business. There isn't anyone else on the high street that really does what they do. So I think it's also an example that you can succeed on the high street if you are offering something that's truly unique to the market.
And the biggest fall we saw was Argos sales down there 8.8%. I mean, how much of a shock is that?
It's not much of a shock. I mean, Argos in particular has been price matched by Asda this year, and they've really made a big play for it, big advertising campaign. We haven't heard from Asda yet, but I suspect that they will have taken some of that share from Argos.
Okay, well, thanks for your time. Thanks for coming out in the cold for us as well this morning, and I will have more on this shortly.
All right, thanks very much, Steph.
Thank you very much. Now, a happier story for you this morning.